Hello and welcome to the day ahead. It's Thursday, June 18. I'm your host, Juliet Sarli. Well, the local market is set to open lower with ASX futures down 0.7% after Wall Street ended lower as the Fed left interest rates on hold. And Federal Reserve policymakers unanimously voted to keep interest rates unchanged despite inflation remaining well above the central bank's target.
Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability.
Kevin Warsh, who assumed the Fed's top post last month, has ushered in a new era, arguing that forward guidance is no longer well suited to the current economic environment.
A difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture.
Well, elsewhere, US President Trump has defended his interim agreement with Iran, saying it had averted a global economic catastrophe, while warning he could launch fresh attacks if Tehran failed to honour its commitments. Speaking at the close of a G7 summit in France, Trump also said maritime traffic in the Strait of Hormuz had risen sharply since the truce was announced 3 days ago, and expressed hope it could mark the start of a wider peace deal across the Middle East. He went on to say, "We're going to bomb the hell out of Iran if they violate the agreement," but said he didn't want them to. He wants them to honour the agreement, with Trump adding that the Iranians were, quote, smart people. Elsewhere, data showed US retail sales increased more than expected in May, with households purchasing more cars and other vehicles, even as they paid higher prices for gasoline. Short-term Treasury yields rose to the highest in 16 months after the data and the Fed's decision to hold, with the 10-year up 3 basis points to 4.46%, and the 2-year yield, which is most sensitive to the market's expectations for Fed rate action, up 16 basis points to 4.207%. That's its highest since February last year. The dollar strengthened across the board amid projections for one rate hike this year, the Aussie dollar at 70.2 US cents. Well, stocks on Wall Street ended lower on bets the Fed's next move would be a rate hike. The S&P 500 and Nasdaq both down by around or more than 1%, with the Fed's leaving rates on hold as expected, but the new Fed Chair Kevin Warsh highlighting the need to tame inflation, and other policymakers projected rising interest rates later this year. The SIBO Volatility Index had its biggest one-day increase in 4 days. All of the S&P 500's 11 major industry indexes closed lower, with communications the leading laggard with a roughly 3% loss. Shares of Elon Musk's SpaceX closed down almost 5%, with the first decline since its market debut on Friday. CME Group slipped after the exchange operator said its CEO Terry Duffy will step down and transition to the role of executive chairman. And shares of Allbirds soared by almost 40% after the footwear maker turned AI company changed its name to Smartbird and appointed former Amazon executive Nadia Carlston as CEO. Well, oil prices gained nearly 1% after US President Trump said the new ceasefire agreement with Iran was not final. Brent crude futures up by 0.8% to just under $80 a barrel. West Texas Intermediate gaining almost 1% to $76.79. Gold fell more than 1% as 9 of the Fed's 19 policymakers now believe they'll need to raise the policy rate this year, according to published projections. And Bitcoin is trading about 2% lower at $64,179 US dollars a coin. Well, ahead today, the May unemployment data is due, and across the ditch, New Zealand releases first quarter GDP. That does it for the day ahead. I'm Juliet Sarli. We'll see you tomorrow.